Hey everybody, Economic Ninja here. I hope you're doing great. Well, the numbers are out. CPI numbers came out and there's a lot hidden in the details and people have no idea what's about to happen. Honestly, economists all around the world are saying, well, we think the Fed's going to raise only 25 basis points. Now that's 50. Or they're going to have two more rate hikes. But no, they're only going to have one more. The point is nobody knows which way is up. Why? Because honestly, excluding energy, shelter, and food, the CPI came in better, right? This is 3 months of better numbers. And it's really impressive to watch this happen in real time because economists are freaking out. Why? Because there's about to be a tipping point. Now, let me explain something real quick. Let's dive into the numbers and talk about what the reaction was and then what's going to come in the next few months. Stocks, bonds, and gold surge as rate hike odds tumble after CPI decline. This is out of Zero Hedge. That's the title of the article. Go check it out. And there's some good charts in here. It says, despite soaring services inflation, and I mean, come on, who's tried to hire a plumber or an electrician lately? Honestly, all services are exploding. Why? For so many different reasons. They're getting inundated because they can't even get good helpers, good employees. As a matter of fact, talked to a buddy in construction today. He says, I cannot get a skilled worker to save my life. So what happens is he's getting inundated because he doesn't have enough people working, right, to get all his jobs done. And so he is raising prices, all right? And that's happening all across the board. So despite those soaring service inflations numbers, rate hike expectations are falling after the headline and core CPI print was as expected. Finally, somebody got something sort of right. And I mean sort of, I'm gonna explain in a second. It says, and after an initially disappointing drop, US equities are spiking higher. Why? It's because equities understand this. The stock market traders understand this. They go, the Fed is going to start slowing down as unemployment's rising, as more Amazons, more Salesforces, more Compass lending companies, all these companies are laying people off. The Fed has done its job. Break the back of the economy. That means break the back of the US consumer. That's it. People are like, stop doing that sound. All right. It says right here, dollar weakness is accelerating. Now, this is what you're not going to hear from any economist with an MBA. You're going to hear it on the Economic Ninja channel, okay? As the dollar weakness is accelerating, it's going to get bad for the Fed. Why? Because as the dollar gets lower, the Fed's like, we've got to prop this up. If the dollar falls too much, we have problems. Well, how do you prop up the dollar value? You raise interest rates. And this has happened time after time after time throughout history, every time the dollar falls below a certain threshold, all right? Now it says gold is topping 1,900 bucks. Now what's interesting is the reason why gold is topping right now, and we're back to these, at the beginning of the year of last year, what gold topped $2,000, and now we're at 1,900. And we're at $1,900 on a stronger dollar, or sorry, on a weaker dollar, stronger dollar. I'm totally backwards right now. You guys remind me in the comment section. You're very good at that. But a bigger narrative for a weaker dollar. See, as the Federal Reserve decides to slow even more, let's say they go to 25 basis points hike the next time, or possibly even after that, they say no more rate hikes. That means the dollar is going to start to fall more, faster, all right? That means gold is going to accelerate. We didn't even have this good of a narrative for golds to bring up the gold price this time last year, all right? The reason why gold fell from 2000 to where, its lows of this year and then back up now was because the dollar was gaining momentum and value because the Fed started aggressively raising rates. Now that that's over, literally, it's almost like there's a rocket booster behind gold. I'm not a financial advisor. I'm just telling you what I think. Now it says, is this the unwarranted easing the Fed warned about? I think people didn't understand this. The American consumer is hurting right now because the cost of energy and food. I don't know if you guys have priced eggs the other day. I went into a grocery store and this was smart and final. I always call it fart and smile, but fart and smile. I went in there and my wife, Mrs. Ninja's like, we want to have some eggs. I want to go get some eggs. So I walk up to the store and I'm, ha, just see beams of light coming out, inflation highlights, just reels. And I go, you know, I need you to pick which eggs, because I want her to be able to see it. I want to get her reaction. I should have caught it on film. And she's like, I don't care, just, oh my gosh. And she's looking at a carton of eggs, a 12 pack for, what was it, $6. And she goes, well, why don't we just get an 18 pack? And I'm like, no problem. Those are $11. Like, what do you want? And she's just like, and I'm like, see, the ninja was right. I even got to do it with Mrs. Ninja. Told you about this inflation, and it's going to get worse. Now, you got to love it, because a lot of people go, where are all those food shortages you talked about? I'm like, you know, this is the crazy thing about economics. And the most fundamental lesson in the world or realm of economics, supply and demand. If all of a sudden chickens started crapping out 10 times more eggs, and those eggs made it to the store, well, price of eggs would go down. It's because there's a shortage. Interesting, isn't it? It's interesting. Not only that, but also the cost of the farmers producing the eggs are getting worse, because they're so in debt, and their debt costs are going up exponentially, thanks to the Fed. See, the Fed's breaking the back, it's a little quieter, of the economy, because they're breaking the back of you. And I want people to understand how important this is, because this cycle repeats itself every 7 to 10 years, but on bigger cycles, every 50 to 100 years. We're in a 100-year cycle right now. This one's going to be a good one. And that's why I want you out of debt. This is why I want you preparing, getting into inflation hedges like gold and silver, things like that. And if you guys have never bought any, I'll put links down below, affiliate links of companies I've worked with that I bought from. That's not financial advice, though. I'm just telling you what I do. But don't put all your money into it. Don't put all your eggs in one basket. Seriously, I just made that up. Point being is that the Fed is on a trajectory to crash the economy. And they're going to do it. They're going to do it really good. It's going to be real nice, real nice. But I want you guys to literally accept the fact that this happens all the time. And not only just because I said so, it's because you could just go read a history book, and it happens all the time. And I want you to do something about it. First step, get out of debt. Second step, like literally save money. Third step, be patient. There's a lot to it. There's more fingers. I don't have enough fingers right now, but I want you to be ready for it. These are good things that are coming. Why? Because you are going to not only level up in this next crisis, you are going to excel. And I want the good human beings in the army that is Ninja Nation, that is prepared and not scared, and they're going to take back the wealth that was stolen from them. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.